Welcome back, ladies and gentlemen, boys and girls. This is Sub LBC here doing another episode of Growing for Freedom. And in today's video, we are going to talk about Bitcoin. And actually, there was a comment left on my last video kind of requesting that I talk about this a little bit. And coincidentally, there's been some talk in the news about Bitcoin as it's been surging over the last few days or weeks here, reaching a new high since its all-time high and then hitting its low, and now it's been surging again, and I think right now we're at about 42,000, give or take. And what's interesting is that I actually was going to make a video talking about banking in general and how I believe it's pretty much a fraud and a Ponzi scheme, and it's just a really shady institution here at this point. But since Bitcoin kind of has been in the news a little bit, I figured I might as well combine both of the subjects and talk about what I feel about the situation that we're in right now. Since I do believe that monetary policy is probably the most important thing involving the potential future of the country and probably the world at large. So, for all you guys that don't know, Bitcoin's been around for a while. Started, I think, around 2009, created by a man by the name of Satoshi Nakamura, who is not a real person, actually. I mean, he is a real person, but that's not his real name. And from what I understand, he used to be involved in a group of, cryptographers that referred to themselves as, was it CryptoPunks or something like that? But yeah, he basically has a history, working in cryptography, very, very skilled. And in wake of the 2008 financial crisis, um, kind of took it upon himself, possibly working with a team of others, and created a white paper for Bitcoin. And the whole purpose was to basically be the future of money, to create a type of money that is nothing like what the money is that we have today, which, in his opinion, was completely built on fraud, greed, and stupidity. So, in any case, yeah, in order to do that, Bitcoin had to have some, particular features baked into its protocol. Number one is that it had to be something that could not be manipulated by any central authority or individual, right? It would be a true peer to peer distributed network that would support the system in which not any one person had any control, which is to say that, nobody could just come in and, basically fraudulently insert numbers onto a screen and, grant themselves hundreds of thousands or millions of Bitcoins, right? It would be completely secured by cryptography. And because of its peer to peer and decentralized nature, it would not be able to be banned or, the government couldn't seize your accounts and steal from you like they can now. If you do things that the government doesn't like, such as, a bunch of truckers protesting in Canada, they had to pay the price by having their bank accounts seized by the government, which is really, really bad. You know what I'm saying? We don't want the government to be able to do that kind of stuff to our money, nor do we want to have our bank accounts just closed and shut off because of our political views or our political affiliations or even our political behavior. And what's interesting is with me, recently I got a letter in the mail. I don't want to get into too many details about this, but yeah, one of my bank accounts was just for no reason just closed. And I wasn't even using it. You know what I'm saying? I mean, I was using it. I had money in it and stuff like that. And I had a credit card. And, I basically decided to open another bank account just as kind of like a backup to the one that I've been using for years. And, they have more branches in my area. So I figured, hey, it's more convenient. I was also doing my car loans through them. I had several car loans. And then for no reason at all whatsoever, and they did not give any explanation, they're just like, yeah, we're shutting down your account. You have 30 days to, basically like empty out your accounts and, move them to other banks, or we're just going to send you a check. And that's pretty much that. And I was just shocked, at that. I'm like, what? Why? It made absolutely no sense. And, it's because of these types of things, as well as just the complete fraudulent and, stupid and greedy behaviors of the financial industry or the financial sector as a whole that kind of, brought the creation of Bitcoin to us. So, what kind of fraudulent, crazy activities am I talking about? Well, the fact that Bitcoin was created in 2009, it shouldn't come to anyone as a surprise as to the timing of the creation of Bitcoin, because obviously at this point we were pretty much coming off, from just walking or facing the precipice of the collapse of the entire banking sector because of all the crap that was going on with the real estate bubble that pretty much came to a head in late 2007 and 2008. So yeah, guys, it was a really bad situation. Banks were doing really ugly things, and I want to talk a little bit about how crazy and insane the banking system was leading up to the financial collapse. And unfortunately, not much has changed. So for anyone that doesn't really know what's going on with banking, at least in the the financial services sector, or the derivatives markets, and things that we really don't have like full transparency on, is that banks just don't do simple things like car loans and credit cards and personal loans and stuff of that nature. There's an entire back end, debt market and repo market that banks are constantly involved in. And this obviously includes things like derivatives and mortgage backed securities. So, the mortgage backed securities, or MBS for short, have actually been around for a real long time. And they were a really great idea. So, the whole idea of MBS is that, essentially when a bank does a home loan, right? They Most people that want to buy a house, they don't have enough money to just buy the house cash outright. So what they will do is they will go to a bank, generally put up some kind of collateral. The bank generally won't finance 100% of the house, but they'll probably finance like 80% of the house. And so what they'll do is they'll write up a promissory note, and this is basically a loan. So over the course of the next, 10, 15, 20, 25, or 30 years in the US, the bank will then collect interest on that loan, as well as recover the principal through a process called amortization. So, for all you guys who don't know how amortization works, is that it's just a mathematical formula in which you plug in the amount of money borrowed, as well as the interest rate and the time that you want that loan to be paid back. And what it does is it calculates the fraction of every, well, first the payment itself, but then also what fraction of that payment goes to interest and what fraction goes towards the principal. So interest being the cost of borrowing the money, principal being the actual borrowed amount at face value. And the way this is designed to work is that, generally speaking, using the amortization formula, is that a majority of the interest is paid in the early payments, right? So it's very interest heavy early on with very little principal, but as you get further and further along, that starts to change. And as you get towards the back end of the loan, right, like past the halfway point and moving forward from there, a majority of the payments start increasing, that going towards the principal and less towards the interest. And this kind of makes sense, considering you're a bank and you're giving a loan. You don't want the interest to be at the back end, because if for whatever reason the borrower decides to refinance, which is basically to take a loan through another bank potentially to pay off your loan, to go with them to for maybe shorter terms or for better interest rates. You don't want your loan to be principal heavy at the front end, because you're basically loaning out the money for free or very close to it, regardless of what the interest rate is. So the whole process of amortization makes sense. But either way you look at it, it is inescapable for the bank to get out from underneath that loan, unless the customer decides to pay off the loan or refinance it through another bank. And this creates a problem for the bank itself, because this capital is being tied up to this one simple loan, and this basically has an opportunity cost, in the sense that the bank cannot use that capital to perhaps take advantage of other more lucrative investment opportunities that might occur over the course of that loan. So how do you get around this? Well, the way you get around it is by creating a mortgaged backed security. So now, instead of just holding on to these loans, you can now sell these loans or portions of these loans to investors. So, other people will come in, like hedge funds, pension funds, I don't know, anyone basically with a few $100 million they want to invest and get a return, they can now invest in mortgage backed securities. And this works out really great for the bank because obviously they can charge fees to join these investors with these MBS products, and then at the same time open up, potentially more operating capital. Since now a big portion of the debt has been paid, they can now use that capital to invest in other potentially more lucrative ventures. Right? Very, very simple. Now, as time has gone on, these MBS products have evolved into other types of debt instruments, one of which that you've probably heard of called the collateralized debt obligation. Now, with a CDO, basically all types of debts can be created using the CDO model. It could be mortgage debt, could be auto loans, could be credit cards. Basically, CDOs can come in all kinds of different flavors. But with CDOs, as far as it applies directly to mortgage backed securities, this allowed for debt to be basically divided up into several tranches, right? So if you guys have ever read the book The Big Short or watched the movie, this is demonstrated, pretty straightforwardly in regards to, basically breaking debt up into different classifications based on risk. So obviously, the lower risk the investment, the lower the interest rate or the return of investment will be, but the risk will be considerably less. Whereas if you want to invest in more risky stuff, such as subprime, borrowers that have home loans that are much higher interest rate because of the fact that their credit's really bad. Potentially, they have much higher loan to value ratios. So the potentiality of a default is much higher. Then obviously you're going to take that heightened risk, but the reward is a much higher return on that investment in terms of the interest rate you're going to receive. Because obviously these types of subprime borrowers pay a lot more in terms of interest than those that have good credit and a lot more equity in the home, right? So this is pretty simple stuff. But with this type of securitization comes a problem, and that is, since the banks themselves are not holding on to these securities for the long term, they become less and less interested in the quality of the borrowers necessarily. Because remember, they're just kind of like passing the buck. And if other investors are coming in to buy up these securitized products, whether it be MBS, CDOs, whatever, then it's like, it's not really their problem if things just blow up because it's the other investors that are holding this stuff. Remember, when the bank creates these debt instruments, they're charging fees to connect the investors to the debt itself. So they make their money on the fees, and the debt's no longer their problem, right? And this obviously creates a problem on the front end because now you have all these banks and mortgage brokers and whatnot that are basically trying to get as many people as they can into these types of loan products without necessarily qualifying them properly to make sure that they're actually adequate to take on these kinds of burdens. And this, of course, creates a problem. Now, these problems are pretty bad in and of themselves, but they start to get even more awful when you start to get into the whole derivatives market. Now, in derivatives, these are not the types of things that just your average Joe Blow pleb can get involved in. In order to get into the derivatives market, you have to be pretty much a massive player in the industry, right? With hundreds of millions of dollars potentially required to participate in these types of advanced trading strategies. Now, in terms of derivatives, one of the major products that kind of came to light as time went on was this thing called a credit default swap. Now, the name is kind of stupid in my opinion because all a credit default swap actually is an insurance policy against a security. So for instance, let's say that you're, a huge hedge fund and you want to purchase some risky or maybe not that risky type of asset like a mortgage backed security. Maybe you want to buy some credit card debt. There's specific CDOs that are made to handle that. But you're worried that there's a chance that the security might go belly up for whatever reason. So what the credit default swap does is provide insurance against that, eventuality. So if for whatever reason you feel it's going to go belly up, you will pay a premium to a credit default swap issuer, and that premium is essentially the insurance that you pay. No different than car insurance or homeowners insurance, right? So as the purchaser of that bond, you can pay a premium, you know, to insure against the failure of that bond. And on the surface, this sounds like a pretty good thing. The problem is that credit default swaps can be sold to anybody, right? So this would basically be like, you have a house, you have a homeowner's insurance policy on that house, and for whatever crazy reason, there are like other people that you don't even know who can also buy homeowners insurance on your house. So there could literally be like, you and then 10 other people that own a homeowners insurance policy against your house. So if the house burns down in a fire or, whatever is destroyed, that insurance company now has to pay back the payout, not only for you as the person that owns the house, but everybody else that bought an insurance policy on that house. And that's not like legal, right? Like you can't do that in the United States, anyways. I don't know about other countries, but that'd be like, you could go out and buy car insurance on somebody else's car if you know that they happen to be a drunk driver and you think there's a pretty good probability that they're going to go out and crash their car. So you buy car insurance on somebody else's car, to get a payout for the damages. It's just like, wait, what? No, that's completely insane. Only the person that owns the car and drives the car should have insurance on that car. But that's not the way that credit default swaps work. And things got even more insane, believe it or not, with products like synthetic CDOs, which is basically creating CDOs of another CDO, So basically, in the eventuality that another CDO fails, there are basically you betting against those who have bet on that CDO failing. It's just like gambling on, like, okay, imagine you have like a football game, okay? And then there's two people watching the football game and they're like, "Oh, I'm going to make a bet, against this team because I think this team's going to win." And the other person's like, "Well, I like that bet. I'll give you 2-1 odds or whatever." And then there's like another pair of individuals betting on those two individuals, um, on which one is going to win the game. So it's just like this layered betting. That's essentially what a synthetic CDO is. It's like betting on other people betting on another thing, right? And this is kind of like the whole thing of derivatives, right? It's all derivative. Everything is derivative off something else. It's essentially just gambling, right? We're talking about a really, really complicated casino where everyone is just like betting on whatever it is they can possibly bet on. It's kind of like the options market on steroids. It just gets absolutely ridiculous. And obviously, when there's a lot of bad actors, a lot of greed, a lot of fraud, a lot of stupidity all mixed into one, the outcomes are not going to be good for anybody involved. And these things, when you're talking about, literally hundreds of billions and possibly trillions and trillions of dollars, if you look at the derivatives market as a whole, it is a several $1 trillion market. When these things start to go belly up, they bring down institutions with them, and that's effectively what we saw when the real estate market started to crumble in late 2007 and clearly in 2008, and it required a massive bailout, $700 billion up front just to deal with AIG, but also we saw massive consolidations of the industry. Lehman Brothers completely collapsed. There was a shotgun wedding between Bank of America and Merrill Lynch. Companies like Wachovia, Countrywide, had to be acquired. Other companies like World Savings were just wiped out. New Century wiped out. I mean, it was a complete bloodbath. And again, I know this from firsthand experience. One of the banks that I used to work for back, in the day, also got wiped out. Dabbling in this industry. But leading up to the failure, I did have a lot of insight as to how the whole thing worked, and I could tell you, from an insider, that it was just not pretty. Clearly there were a lot of problems that all really just stemmed from the fact that a lot of the banks and brokers that were creating these loans didn't have really any vested interest on the quality of the loans that were being created in the first place. And it was only a matter of time before all of this stuff just blew up in our faces, and it was just a really ugly situation. And you can see from this event that there were those that were really, really motivated to create a new form of money, a new form of currency in which these types of bad actors could never be rewarded for their folly, right? And that kind of is what leads us to the creation of Bitcoin. So in 2009, a man who refers to himself as Satoshi Nakamura, I believe it was 2009, yeah, he decided to publish a white paper on the Bitcoin protocol. Now, Bitcoin is, on one hand, it's very, very simple. On the other hand, it's a little more complex. I'm going to try to describe it as best as I can in this video. I'm not going to have all the, the crazy graphics and whatnot, so you're going to get like the audio version of it. But effectively, Bitcoin was created to be an immutable, anonymous, and stable, protocol for creating money. Immutable in the sense that the government can't come in and seize your money. You have complete control over your Bitcoin wallet. So as long as you have your keys, you control your crypto, right? It's anonymous because Bitcoin wallets don't have your name tied to them. Basically every time a crypto wallet is created, you can create as many crypto wallets as you want. Corresponding private keys are created for every wallet. And, moving forward, again, no one can take it from you and nobody knows who anyone is because instead of having names and social security numbers and all that stuff tied to a wallet, all a wallet is effectively a public key and a private key, right? And that's basically it. Not even really a public key, to be honest. I think with the Bitcoin protocol, it's really just the private keys that allow for control of the wallet. The ability to send Bitcoin. Now, in terms of being able to receive Bitcoin, there is no limiters of any kind. So essentially, if you have a Bitcoin wallet and somebody happens to know your address, they can just dump Bitcoin into your address, and there's nothing that you can do to stop it. Now, whether that's a good thing or a bad thing, can't really say at this point. I think for Bitcoin, it's less of an issue. It becomes more of an issue with other cryptocurrencies, but I might get into that a little bit later here in the video. But the point is that the entire thing would be decentralized and would be immune from manipulation of any kind, right? So no one can just like print, 100 billion Bitcoins and just deposit it into their own wallet and become, Bitcoin billionaires overnight with a stroke of a pen or with a keystroke, as it were, right? That was basically the whole point. And a lot of the technology, or I should say the primary technology for Bitcoin, was based on something called blockchain using a proof of work standard. So, what does this actually mean? Well, effectively, for Bitcoin to work, you have to have a lot of participants, right? Kind of like a torrent type system where it's all peer to peer. And what happens is that you have these, I guess, or what they are called are miners, and the miners are basically running the Bitcoin software itself, and their job is to not only verify transactions that are occurring on the network, but they're also working diligently to solve complex problems, mathematical problems. And the complexity of these mathematical problems are derivative of the number of participants on the network at any given time. So obviously, as there's more and more, computers being added to the network, upping the overall computing power, then the mathematical problems become more and more difficult to solve. And effectively, these problems are designed to be solved within a very specific time frame. With Bitcoin as it exists today, that's about 10 minutes. So about every 10 minutes, there will be a specific miner who will finally stumble on the answer to this complex mathematical problem. And by doing so, are rewarded a Bitcoin. And the reason why all of this hard work is being done constantly is basically to create securitization for the network. Because remember, guys, in a peer to peer system where everyone's trying to keep track of a copy of an append only ledger, it is this work that's constantly being done which provides security for the system. So everybody on the system has the same exact copy of the ledger. They all can verify that they all have the same copy of the ledger. And if one dickhead comes in and tries to insert a false copy of the ledger with, a Bitcoin address that has like a million Bitcoins in it, for himself to make himself an instant Bitcoin millionaire or trillionaire or whatever, billionaire, I guess. I don't know. That's not going to fly, right? Because there's got to be a consensus protocol that takes place. And this is what all the hard mathematical proof of work is designed to establish, right? So the only way that you can insert a ledger into the system and have it become like, the accepted ledger is to own more than 50% of all the computing power available on the network, which is impossible to do. You know what I'm saying? Even the most powerful mining pools that exist on the Bitcoin network are not able to achieve more than 50% of the entire computing power of the network. So this makes it very, very secure. And it also makes it 100% peer to peer, which gives its decentralized traits. So again, people can't just go in and make false copies of the ledger. Now, with the whole mining aspect, and blockchain technology, that is the backbone of this thing. Bitcoin essentially becomes just like a giant segmented worm. Where every segment is a 10-minute block of transactions that occur, and because of the fact that the solving of the mathematical problem uh, derives a solution which requires the block itself. I guess I should say that all the work that's done is actually built from the information within the block. So once the mathematical problem is solved, it is very easy for everyone else on the network to check the work, right? Because it's all working off hashes. So, for anyone that knows what a hash is, you basically have a hash, which is an algorithm that produces an output from a data set. So if that data set is the block itself, then once the hash is solved for, that can be presented, everyone can see it, everyone knows that it's accurate. That way we know that that block of transactions are legitimate and then can be safely added to the ledger one block at a time. And the deeper and deeper you get into the thing, or I guess I should say the older and older the block gets, the more and more secure it gets. So if anyone tries to go in and try to change block number one, the first block ever created on the blockchain, that's like pretty much impossible to do here at this point. And most people that are engaging in Bitcoin transactions, generally will wait for like 2 or 3 verification blocks to pass into the system before they consider that transaction to be like 100% and will never be able to be changed again, right? That's like kind of like general standard practice. But yeah, that in a nutshell is how Bitcoin works. So you have miners that are constantly mining. That's how Bitcoin is created. And then from there, you can deposit the Bitcoin into their wallet. And since they have private keys to their wallet, they can send Bitcoins to wherever they want or just keep them. At the end of the day, mining is the reward for, you know, mining Bitcoin and for keeping the network up and keeping it secure, keeping it decentralized. And the very nature of Bitcoin is also to be anonymous. Since, again, all you need to do is have a copy of the software. You can create wallets at will. And every time you create a new wallet, that's it. It's just basically a long hexadecimal, address that has a corresponding private key that allows you to have control of that wallet, or in short, the ability to send Bitcoins to other wallet addresses on the network. And these transactions are also handled by the miners, which in effect are just participants on the network itself. So this thing has obviously got a lot of attention from its inception. It's been growing and growing and growing. There have been some changes along the way in the form of forks because of disagreements, between how the network should behave in terms of the block length. There's been other things, with SegWit and all these just weird kind of schisms that happen throughout. So, which is why you see things like Bitcoin Cash and Satoshi Vision, and I guess they call it Bitcoin SV. But at the end of the day, the Bitcoin core is the core network, and it's obviously reflected in its price, right? As of this moment, Bitcoin has the highest value compared to any other crypto currency ever created, and I don't see that changing anytime soon. Especially given the fact that, in my opinion, a vast, overwhelming majority of competing cryptocurrencies are all pretty much, shit. They're just fraud coins. A lot of them really don't have any specific use case or purpose. They're just hype, or they're just nonsensical. Things like, Shiba Inu, Dogecoin, even Ethereum, in my opinion, is, kind of had its reputation has been declining somewhat over the years, and for a lot of different reasons. And I will say that Ethereum is a better technology fundamentally, or at least it was during its inception, because at the end of the day, Bitcoin, all it really is, in its simplest form, is just a ledger, right? It's an append only ledger in which only new things can be added to it, segment by segment, and that's it. There's really not much more complexity. It's just a log of transactions. Whereas when you look at a technology like Ethereum, you can store more things on Ethereum. And there's actually, smart contract program functionality, tokenization, minting. There's just a lot of things that have made Ethereum a little bit more interesting. However, I'm not really that sold on the founders. Not the biggest fan. There's been massive schisms in Ethereum, having to do with some scams and frauds that occurred very early on in its creation, revolving around some of the early DAO implementations, which I wasn't really too stoked about. And then the whole thing about Ethereum, which I think has also been kind of a a bad thing, or that kind of discredits Ethereum a bit, is this whole hype with NFTs. Now, one thing I will have a hard opinion on as it concerns NFTs is that NFTs, in my opinion, are nothing but absolute frauds, right? This has got to be the ugliest, most disgusting implementation of cryptocurrency that I've ever seen. Fundamentally speaking, NFTs are just so awful. Not only because they're just stupid in their very nature, but the thing is that almost all NFTs are not actually on the blockchain itself. They're just referenced, right, to something off the network completely, which is, in my opinion, stupid. Now, I would say NFTs, if you could mint an NFT in the actual like image or whatever it is you're creating was actually on the chain, then I think that there would be, some value there of some kind. But the problem is you can't keep NFTs on chain because the chain would grow to such an incredible size that it couldn't be, centrally maintained in a peer to peer way, at least not in any way that makes sense for anyone participating on the network. So a vast majority, if not nearly all, NFT artwork, or basically anything, it's all stored off chain and only referenced by the token on the chain. And because there's no actual cryptographic relationship between the item and the token, then it's just garbage. You know what I'm saying? Like it's completely flawed in its implementation. And of course, this has been reflective in the value of NFTs, which have fallen more than 99% since its inception. And, you know, I'm not here to like really give anyone financial advice, but under no circumstances should you invest any of your money in any NFT for any reason ever, right? It's just the worst thing you can possibly do. There are better ways to use cryptocurrency other than NFTs, and I'm really glad to see that the whole hype around NFTs has just completely died out, because It really, in my opinion, did a lot to discredit the reputation of cryptocurrencies in general. And things were already bad enough. There were so many coins out there. And even to this day, there are just so many coins. I mean, you have like Internet of Things, Siwa, and gosh, so many that it just makes your head spin. For me, I think the only ones that I've ever really paid any attention to were Bitcoin, obviously, Ethereum. Again, more robust, more capable, has its problems, but it's there. And then Monero, because it is a true anonymous uh, system, right? But unfortunately, it's been having difficulty with widespread adoption, mostly because of the fact that it is so anonymous. It makes it, really, really shady, and it's been tough to get widespread adoption because of how good it is. Kind of strange, but since this whole thing started, the whole crypto hype. I mean, we've seen FTT tokens go to zero. Terra Luna was obviously a massive failure. Trying to use algorithmic arbitrage in order to peg the currency to a fixed value, without being backed by anything real. I have a very low opinion of stable coins in general. Things like Tether and what was it, USDC or whatever. Like the backing of these things are questionable at best, and I would not recommend holding any kind of stable coin for any length of time. I mean, I think that they are useful to get in and out of currencies, cryptocurrencies, in the very, very short term, but you don't want to be like investing thousands of dollars in these types of stable coins, even with the staking rewards. They have shown a propensity to be driven again by mostly fraud, greed, and stupidity. And yeah, just don't mess around with it, guys. If you're going to be involved in any kind of crypto, then I would pretty much just stick to, Ethereum and Bitcoin, with Bitcoin being, in my opinion, the far safer choice, in terms of, guaranteeing the fact that you're not going to lose 100% of your investment, which is not something that, can be guaranteed if you're going to, put your money in something stupid like Dogecoin or, Shiba Inu. It's just, this is all meme stuff. It's just ridiculous. These coins will never be able to be used to exchange for any real products and services in any tangible economy, and are strictly for speculative purposes. And even then, I mean, do it for fun, but do it at your own risk. But if you actually want to be serious about, quote unquote investing, you don't know if you can barely call it that, then you really want to stick to Ethereum, Bitcoin, and that's pretty much it. So that takes me to what my final attitudes are about Bitcoin overall, right? Like, what do I think about it? Well, in terms of its goals, um, it's not really been terribly good, right? I mean, at this point, I don't think that Bitcoin is ever going to be the future of money, right? It's unfortunately far too inefficient. Transactions take too long. The amount of resources it takes per transaction is way too high. Um, and it is not price stable. Uh, all of the things, if you look at it, its volatility, it just makes it too, it's never going to be like a reliable medium of exchange, right? I mean, gold is still better. Gold doesn't suffer from the insane volatility. Now, granted, gold can't be sent to other people across the world very easily. So, there is a practical limit to where, true hard currencies or true hard money, which is what gold is. I guess it's not really fair to compare them one to one. But when you look at them in terms of price volatility, Bitcoin is not really done too well. Nobody wants to deal in a currency that can fluctuate, as much as 70 or more percent over the course of just 1 year. That's rough. Even if the price of it continues to skyrocket and generally have an upward trend over the long term. Again, this makes it very poor as a medium of exchange because if the price of it is constantly going up, then it becomes very difficult for people to want to separate from it, right? And we've kind of seen this, if you look at the habits of people that actually buy Bitcoin, they pretty much buy and they hold. That's all they do. They just buy it and buy it and buy it and hold it and hold it and hold it. And, they're all looking towards the future, a future where they're hoping that Kathy Woods is right and that Bitcoin will be worth like $1 million per coin by 2030. Maybe she is right. Maybe she's wrong. It doesn't really matter because, there's a lot of people that are just faithfully holding on for dear life. And that's all that they're going to do. They don't have any plans on ever using it to buy goods and products in any economy. So, if that's the case, then as it being a future form of money in the sense of, a medium of exchange, it's never going to be able to accomplish that goal, right? So on that level, it just fails entirely. Now, as a store of value, potentially, but again, it's all driven by faith, right? So if that faith wanes and everyone just decides, oh, this is just worthless crypto garbage and I want to get rid of it, and everyone's trying to sell their Bitcoin on the market, obviously the price is going to drop. This has already happened several times during the history of Bitcoin. And it's going to happen again. You know what I'm saying? I mean, sure, prices are up now. Maybe we hit all time highs, but at some point it's going to crash hard. And it doesn't appear, based on historical trends, that Bitcoin is really a hedge against the economy. So, or I should say against Wall Street or the economy, whatever. Either way you look at it, like when economic times are really tough and there's a lot of people that have their money tied up in Bitcoin, they're going to sell it to turn it into actual dollars they can use to buy food and fuel and to pay taxes, things that you'll never be able to do with Bitcoin, at least not currently. There's also some worry, that the regulation of Bitcoin could end up being a problem. And even though regulation cannot directly affect Bitcoin itself, it can definitely affect the exchanges, which are currently the only real ways to on ramp and off ramp from Bitcoin, right? Unless you know somebody that has a Bitcoin wallet with Bitcoin in it that's willing to trade you cash in person, the only way to really buy Bitcoin is through an exchange. And of course, you can go with, decentralized exchanges, they are out there. But the moment you start engaging with exchanges, the entire anonymous aspect of Bitcoin kind of falls by the wayside, right? Because even though Bitcoin is anonymous by default, again, it's just wallet addresses that are created spontaneously anytime you create a new wallet. But the moment you buy Bitcoin and then receive it from an exchange to a wallet, that new wallet address is now tied to your name. And since everybody has a copy of the ledger, and they do have ledger browser software where anyone can just open it up and look at every transaction that's ever occurred ever, since the very first Bitcoin was ever mined, anonymity just goes out the window, and that kind of sucks. You know what I'm saying? So you look at all the features and all the problems that Bitcoin was designed to solve. It hasn't particularly been great at doing any of them. Inefficient, slow, expensive in terms of transfer fees. These fee costs though diminish the larger the purchases, which is good. So obviously if you want to send large sums, then Bitcoin is a good alternative to using other methods. But in terms of like using Bitcoin to buy like everyday items like food, cigarettes, gas, it's way too expensive to use for this kind of day-to-day thing, and it's certainly way too slow. Now obviously they've been building on top, layers on top of Bitcoin with things like the Lightning Network, and there's all kinds of other layer protocols that are designed to operate on top of Bitcoin. But it's like, if we're looking at just Bitcoin as a core technology, it's just not particularly great at handling the things that centralized systems like the Visa, MasterCard systems or the Swift network. These things are very, very fast and they're very, very cheap. And the energy needed per transaction to achieve is a fraction of what, Bitcoin is. You know what I'm saying? Bitcoin is just not designed to really compete directly against the payment processing technology that we've got right now. So, at this point, Bitcoin is just another speculative asset. It's just like a stock, or a bond, or, anything that you want to basically put your money on and hope that the line goes up. And I think that that's pretty much all it's ever going to be. It's been around a long time, well over 10 years. And even when the internet first, hit mainstream, it became pretty clear that the internet, was going to find a whole multitude of use cases. It did not take that long for, people to figure that out. And obviously, as people kind of got more into the technology, more people used it, it did. The internet is now a irreplaceable piece of infrastructure that changed everyone's lives. I don't think Bitcoin has that impact, or obviously has not had that impact, and I don't think that it ever will. I do know that it has, several $1 trillion of market cap, or, a trillion or a couple trillion, could go much higher, probably will. But as far as its impact on society, I just don't see it. I mean, Bitcoin is one of those things that could disappear tomorrow and it wouldn't affect anyone. And I don't think that that's going to change, even over the course of the next few decades. So if you can't really find a use case for Bitcoin outside of just speculative investing, then at the end of the day, that's all Bitcoin really is, you know? And given its volatility and the fact that, you can't pay taxes with it, there's really nothing you can buy with it, that anyone can't just use other methods to buy things with. You don't want to like invest more than like 10% of your portfolio if you're fortunate enough to actually have an investment portfolio. Yeah, 10% tops, because I think it's safe to say that anyone that's got an investment portfolio is willing to take, a 10% hit on a high risk, high reward type thing, right? So if that's the kind of person that you are, then that's it. 10% of your investment portfolio, buy all the Bitcoin you want. If it goes to the moon, then yay, everyone's happy. But if it plummets and goes to zero and stays there, at the end of the day, it's only 10% of your portfolio. I'm sure, if you're well diversified, you'll make up for the losses pretty easily. So, yeah, that's my opinion about Bitcoin. But again, I am a believer. I own a lot of Bitcoin, several $1,000s worth. I want to see the line go up. I just think it's kind of sad that it never really fulfilled its destiny per se. It never really, the vision really never came true for why it was originally conceived. And it never solved the problems that was ever meant to solve. It just became just another thing that we can bet on. No different than a derivative or a stock or an index fund, or, anywhere else you can put your money just hoping that the line's going to go up. So, yeah, that's pretty much all that I've got to say about that. As always, guys, I want to thank you for, listening in on this little recording here. I'm glad to know that you're all still out there. I mean, my last video actually had a lot more listeners than I thought that it was going to, especially based on my first video. But I guess that kind of makes sense. This is, generally been a cannabis centric channel. So, the last video, I did expect more views, but I guess there's still like a couple thousand of you guys out there, still, checking in on what's going on here, which I find quite surprising, given the fact that I haven't really made any uploads over the last 4 years. So I guess at the end of the day, I just want to tell you that I'm glad that you're all still there. Really happy, as a YouTuber, to know that I've got such a quality audience. Not so much of a big audience, but ultimately, I would much rather have a high quality audience than just a huge ass audience, because you know there's a lot of viral type content out there. But what I've noticed from those who get a lot of viewers is that they're very fickle. I mean, they'll hang around, they'll watch you, but the moment you start doing something or just getting boring, then people just kind of check out and move on to the next thing. And audiences can be very fleeting. And with you guys, I think as things are right now, we've got a pretty good strong core of listeners, and I want to keep that level of quality high. I like people that are engaged with what I'm doing, more so than those who are just kind of window shopping a little bit here with this channel. So definitely like to keep it going. If you have any recommendations in terms of subject matter, feel free to let me know. Or as always, just comment and just say whatever you'd like uh, based on the content of the video, or just to say what's up. Again, I appreciate you guys more than anything else. And yeah, other than that, have a good night, and I hope to talk to you all soon.